All right, everybody, and welcome to this week's podcast, the Ecommerce Sales Tax Podcast, where every week we try to bring to you pertinent issues that have to do with sales tax for e-commerce sellers, things that are in the news, things that you need to deal with, things that you need to know about. And Mike, I'd like to welcome Mike Fleming to our podcast. Mike, thank you so much for sharing your time with us, sharing your knowledge. So, Mike, what do we have for our listeners this week?
Well, we so often talk about why you should care about taxes, and that usually leads to personal responsibility. And came across a very recent case, it's an ALJ decision, an administrative law judge, and it's just about that. It's about personal responsibility. And in this particular case, there were 12 LLCs, and those LLCs were owned by a parent LLC, and the sales tax didn't get remitted. So state.
Mike, let's, sorry to interrupt, but you know how I am. I'm going to interrupt all the time. If you just think of yourself as not a tax person, right? You know what an LLC is. But I have a friend just posted on Facebook, so excited because his gun engraving business has now been accepted as an LLC. And so, that stands for limited liability company. I know you know that. But sometimes people think because they've read some literature, somebody that's trying to sell them on setting up an LLC, my worries are over. I can't get sued. I can't have any tax problems because I'm an LLC. And so this is a good example because this guy has 12 LLCs, layered. And so he probably felt like he's pretty insulated.
Yeah, because the owner of those LLCs is an LLC. So it's even another level of insulation. And by the way, this is not just LLCs. This is all types of corporations. I mean, the whole reason we open up some sort of entity is to protect ourselves from, well, not the sole reason, but a big reason is to protect ourselves from personal liability. This just happens to be an example with a limited liability, and with the name limited liability, you'd think that you'd be protected from all liabilities. But when it comes to sales tax, as we so often say, the rules are very different. And in this case here, he was the majority owner of the parent LLC, but he delegated all of the sales tax responsibilities and all of the financial responsibilities to other people or owners. And when none of that get paid, the state actually came after him as a member of that parent company. And his defense was, I'm not responsible. I didn't have any direct supervision over this. But the state took another position and said, oh yeah, you are responsible. And this administrative law judge has upheld that there is personal responsibility there when the company is unable or unwilling to pay any of its sales tax debts.
Yeah. And this is just a very recent example of something that we see all the time, that and states tend to take different views of different types of taxes. So when it comes to like payroll withholding taxes, and if you don't remit that, you collect that, withhold it from your employee, and then don't send it in, then the state calls those trust taxes, right? And the state tends to get all self-righteous about that. Like, how can you dare pocket money that came out of your poor employees' pockets? It's still a tax, but sometimes states look at that a little harsher. So payroll taxes is one thing, withholding taxes, I should say. And then the other trust fund tax that they talk about is sales taxes, because that money is money you collected from a taxpayer who paid it in such good faith they were expecting it to go to buy books for Jimmy at school, and how dare you stick it in your own pocket. So it's called a trust fund tax, as opposed to, in some cases, the penalties may not be as harsh if it's just corporate income tax.
And a lot of the CPAs and attorneys that we work with are used to payroll taxes, and it's a concept they well understand. But sometimes they just don't carry it over to sales tax. You know, they don't link the two together. But it's very much the same as you're saying. I'd say sales tax goes a step further, because what you're talking about is, you know, money being withheld from an employee and not getting turned in, or tax that's being collected and not getting turned in. But in a number of states, it doesn't have to be tax collected and not remitted. I mean, just the mere fact of not collecting the tax can also create a personal responsibility. So it can be even more aggressive when we're talking about issues like this.
Okay, yeah. Great distinction there. Great distinction. It's obviously bad if you collect it and don't send it in, but even if you don't fail, do we know in this case, was it tax that they simply didn't collect?
Yeah, in this matter, it was simply tax that um, I haven't had a chance to go in and read the whole case yet. I just read the synopsis of it. But from what I've read, this is a case of tax that just wasn't being collected. It was not a case of tax collected, not remitted.
So you can't blame the guy, right? I mean, he's in an LLC, very layered LLC. The real truth may be he really had no idea. He really did delegate it to someone, you know, the controller or somebody like that. It may be totally on the up and up. You know, we don't get that level of detail in a administrative law judge ruling like this typically, but it may be totally what happens all the time. I mean, who as a CEO or owner that has an accounting person, who stays on top of those level of details?
Not very many. I can give you, you know, if we want a really dramatic example of this, there was a bookkeeper who didn't understand sales tax, and this company was not based in California, but they had consigned inventory there that created nexus for them. Now, the seller of the consigned inventory was responsible for that sales tax, but because they had nexus, they had a responsibility to collect all of the sales tax on their internet sales. Well, this bookkeeper didn't understand what she was supposed to be doing. She didn't know what to do with it, so she kept journaling it back to the general ledger. And this went on for 10 years. And it wasn't even discovered until she was actually let go. And once she was let go, all of a sudden this came to light. And now we have 10 years worth of collected and unremitted taxes in the state of California. And at that point, we got a call from the owner of the company, and he knew he was in trouble. And we immediately called California and worked out a deal with them. So no one went to jail in that case, but he was smart enough to realize, hey, I've got to get ahead of this. I didn't do it on purpose. And so long as you didn't do it on purpose and you step forward to the state, there are ways around this. Now, he didn't have the money to pay it back. You know, he thought those were profits all of these years. But he worked out a payment plan with California, and we worked through a VDA. So some of the penalties and interest were waived on some of the sales, but they didn't waive any of that tax that was actually collected. He had to pay the full 10 years of back taxes.
So I was looking into this New York situation a little bit deeper, and you know, we have some resources that we can dig into. One of the things that we subscribe to is CCH IntelliConnect, and they have some really good charts. And we're going to make a chart available to you from the CCH IntelliConnect resource that we subscribe to, and it's the Healy Shadowald annual revenue department surveys. And as I was just looking through the various treatments by each of the states, and I just want to say something that's a disclaimer really about these charts. First of all, charts is never the final answer to any sales tax question, but it is a good start. It's a good place to start. Second of all, these particular charts are charts of survey responses from state revenue departments. So that's just a survey sent to a state asking certain questions, and they're not going to be bound by these questions. It's still helpful in terms of just trying to get a picture of the situation. So anyway, Mike, with those caveats, I just thought, let me look into New York, because this guy is an LLC, a member of the parent, and I don't know if he's a member of any of the other subsidiary LLCs or not. But I just wanted to see what's the New York, how do they word this? And so as I read from this chart, and again, we're going to make a copy of this chart available to you, any officer, they say, director, or employee of a corporation, so this is an LLC, so far this doesn't apply, comma, any employee of a partnership, so we're not a partnership here, but here we go, any employee or manager of an LLC, so this is an LLC, who is under a duty to act in complying with any requirement of the sales and use tax. So perhaps this guy could argue, yes, I'm an employee, or he could say, I'm not an employee, I'm an owner. Therefore, I'm out. And an owner of LLC, the terminology is member. So he could say, so far this doesn't apply to me. And then the last semicolon says, any member of a LLC is a quote unquote responsible person. So subject to personal liability. So as you can see, New York is a very, we know they're very aggressive, but their statute for purposes of personal responsibility is also fairly encompassing. You can be just an employee and your LLC doesn't collect a tax, and you were the person that was supposed to be doing that, and you could be personally responsible. Or you could just be a member and you're not even involved in it. You know, you just invested some money and you're a member. Well, then later on you come, you face something like this guy's facing in New York.
Yeah, absolutely. And unfortunately, you just mentioned a scenario. We get calls from people all of the time who are not active members, and they're people that they've entrusted to do this, sort of like silent members, silent partners. And all of a sudden the state is knocking on their door. So states don't fool around. They want their money, and they're going to get it, or try to get it, from anybody that they possibly can. And by the way, most of the times when you're doing the registration paperwork for a state, or even if you're not registered, a non-real person cannot be the responsible party. An entity cannot be a responsible party.
I was going to say a non-real person.
Yeah, sometimes, entities are considered persons for certain definitions. But for these purposes, for a responsible party, a corporation cannot be a responsible party. You actually
you can't somehow skirt all these laws by saying, technically the way you wrote this statute, it's a corporation, and a corporation has no money, and you can just bankrupt the corporation. And states are smart like that. So they say, oh, and by the way, even though for all other purposes a corporation is a person, not for purposes of this statute, they're not a person.
Correct.
So Mike, I want to just glance through this chart and just pick out some patterns. And again, we're going to make this chart available to you for free. But as I look through what type of individuals, so New York is probably one of those states who is very broad. Florida is another one. Can I say any person who is required to collect, truthfully account for, and pay over any tax, including excise tax, motor fuel taxes, sales taxes, and who willingly fails to collect and pay over such tax, or willingly attempts in any manner to evade or defeat such payment, is, in addition to other penalties provided by law, liable for a penalty equal to twice the amount of the tax evaded or not paid over to the state, Further, any officer or director of a corporation who has administrative control over the collection and payment of the tax and who willingly directs any employee of the corporation to fail to collect or pay over, evade, defeat, or truthfully account for the tax is likewise liable for such penalty. So double the tax on this person.
Mm-hmm.
We know that Florida is very aggressive on personal responsibility. Other states, I'm sorry, go ahead.
I was going to say, you know, do we hear any mention of jail time in there? Because
not in this particular one, but I know that Florida has that type of rules, and I'm sure if we dug deeper, and we know from just reading various reports that Florida is very aggressive like that.
right. I mean, Florida, one of the states, if you want to Google sales tax Florida and jail, you'll see a whole bunch of stories on it. So
Yeah,
it
a
not
lot of
only
people overhype that a little bit,
right.
But still,
Yeah,
even if you ignore jail, paying double the tax and having a criminal record, not good. Not
absolutely.
good, right?
So it's this is serious stuff. You know, it's we bring it up all of the time when we talk about why you should care. So it's it can literally put you out of business.
And it could literally bankrupt you personally.
Mm-hmm.
Now, some states, I know from just advising companies over all these years, that there's a risk to becoming an officer in a company. And in some of these states, it doesn't matter if you're the owner or officer, because it says any employee. So like Indiana says, tax manager is personally responsible. So that's kind of scary because I move in that world. That's my colleagues. That's people that I walk and talk with, that you could be stuck like that. So sometimes people are reluctant just to be an owner or an officer, and for good reason. But for sales tax, it doesn't necessarily protect you. Kentucky does, well, according to this chart anyway, right? Kentucky, Maryland, other states say that only owners and officers are held personally responsible.
I was going to say, going back to Florida for a second, this failed, and thank goodness it failed. But if you were the CPA of a company that had shenanigans going on, the CPA, if they should have known the shenanigans were going on, they were subject to the same penalties as all of the other people. So even if the CPA didn't know, if they should have known, then they could be held responsible too. So just another responsible party that did not pass, but it just goes to show you how far some of these states are willing to try to reach.
Mm-hmm. Texas is another state that says officers, directors, controllers, or tax managers, or other employees with tax filing obligations can be held personally responsible. That's very similar language to state of Washington. So
how would you feel? I've run into, we talk to not even tax managers. We talk to just employees of companies. We bump into them at these events that we go to around the country. And when they find out they could be personally responsible, they're like, I am not making enough money to potentially bear all of this risk.
right.
So, I mean, it's very
Especially
shocking.
if they have management who is directing them not to pay tax, Inadvertent mistakes is one thing, but if someone's directing you to do it, that's a problem.
Mm-hmm.
We just got an email the other day. I haven't shared this with you, Mike, but somebody emailed us saying, I am aware, they did it through a very cryptic email account, that he was aware that he or she aware that a company that they work for was purposefully with keeping tax that they remitted. And he wanted to know if we would help him turn in his company and what state should he turn them into. He had a long list of questions. I didn't even respond to it. I have no interest in being involved in that at all. But he said it's a well-known company, and the directors are all very well known. I'm like, man, I have nothing to do with that. So no, I didn't even respond to it.
Yeah, if he finds out about New York will pay him, what is it?
30%.
30% bounty for something like that.
Yeah.
Hopefully the company starts flying right before he figures that out and turns him in there.
I think that's more the responsible thing to do. Like, or maybe he has approached management and said, hey, this is not right. I don't know. I don't want any more details, but I know these things happen all the time. And you look at these charts and you think, man, do you really want to be involved in taxes? So the other part of this chart, did you something you want to add to that?
No, I was just going to say, when now we're talking not inadvertent. Now we're talking about things done purposefully, and that's
Right.
where the word criminal starts coming into play.
Right.
So it's just not worth it to me, based on all of the potential ramifications. I can't see how anyone can justify it,
Right.
based on what they're risking.
So now the question is, not only does a state have a personal responsibility statute, and what is their definition for who could be held personally responsible, whether it's officer and owner or employees or members or employees of partnerships, but what taxes? So we said withholding taxes and sales taxes are considered taxes held in trust, and they have a higher threshold typically than a corporate income tax. So the next question is, does this personal responsibility statute apply to all taxes or just the trust fund type, trust type taxes? So as I scan down the chart, it looks like, I don't know, maybe the common answer is that personal responsibility statutes apply to only the trust taxes, such as sales tax or withholding tax. That's a very common answer. And then maybe a third of states say it applies to all taxes. So Nebraska, Nevada, all taxes. Let's see some of the bigger states. Texas, only trust taxes such as sales tax. Let's look at California, only trust taxes. How about New York? Specifically applies to sales and use tax. How about Florida? Florida, we said, was wide open. Well, that's a big answer. It's basically their same answer as they gave for who is responsible. So there you have it. The two questions are, does a state have a personal responsibility statute? And the answer to that seems to be just about every state does. And then secondly, who is considered a responsible person? So the chart can at least get you going down that right road. And then third, what taxes does it cover? In light of that recent case in New York, I think it's very timely information in that we can share this chart. I think will be helpful.
Yeah, absolutely. It's charts. You never want to base a final decision on a chart, but like Andy's mentioned, it's a great place to start.
Yep. All right, Mike. Well, thanks for another great session of the Ecommerce Sales Tax Podcast.
Thank you, Andy. Glad to be here.
All right. See you next time.
Bye-bye.